Hey there, it's J-Rod here for Rich Retirement TV, and today I'm going to reveal my favorite reopen rally stock. My family and I just came back from a vacation in Miami, and I can't tell you enough what a great experience it was. We normally take a trip down to the beach in the dead of winter. My wife really loves the warm weather, as do I. But each winter, the living up here in Baltimore, it grinds on us. The cold weather grinds on us a little bit more every year. So we said, you know what? We went through having COVID ourselves in January. So we said, let's just hop on a plane. Let's go down there and catch some beach, get some nice ocean air, and just have ourselves a good time. So we went ahead and we did that. We took both of our kids, hopped on a plane and went down there. And the experience was great, but more than that, I learned so much about what's going on, what's really going on right now. The news is very negative. It's painted a very negative picture about people in the U.S. Related to COVID, but that everything is terrible. You got to stay locked up inside. We were safe, and we were able to. We went to the airport. The check-in process was smooth. Everyone wore their masks, on the flight. It was a packed flight on the way down, on the way back. There were no shortage of patrons on our Southwest flight. The hotel we went to was bustling with guest check-ins. No shortage of guests there. The beach was popping with people, and the restaurants that we went to were packed with patrons, both on the inside and the outside. They were safe, but really what my eyes told me was a different story than the one I was seeing on the news. Ultimately, people are stuck. They're tired of being stuck inside like us, and they're going to, like we did, escape as soon as they're able to this spring and summer. And honestly, now is the time to get a jump on those stocks that are going to do really well in the grand reopening, so to speak, as COVID vaccines roll out, and as people who've had it, like we did, have natural immunity. We went out and enjoyed ourselves. We're not alone here. People are we talked to people while we were down there, other guests at the hotel we were staying at, and they were saying the same thing. They couldn't wait to come down. It was having such a good time. Couldn't wait to come back. That's all points to great things happening for stocks related to the reopening. So there's a whole ton of them, but today I'm going to focus on my favorite stock for this week. And without further ado, let's dig right on into the chart. Today we are going to take a look at Gogo. That's Gogo Incorporated, ticker GOGO. And if you've been watching my videos for a while, you know that this is not the first time I've talked about this stock. First of all, they're a Wi-Fi provider, like the leading Wi-Fi provider for commercial jets, like the Southwest jet we rode on the way down and back. And they also provide Wi-Fi for private and corporate jetliners. I first recommended this stock back on August 26th of 2020, and the stock doubled in just 6 trading days after I put out the recommendation. And since that video first aired, the shares have more than tripled since the recommendation. But fear not, if you didn't catch that video, you've got yourself another opportunity here to potentially double your money or more. And here is why. I'm going to show you the three reasons why this stock is going to pop here. You take a look, and pull up my drawing tool here. You take a look here. We're just after the close on Tuesday. You see just this beautiful breakout here. This is the initial breakout I was talking about in August, just exploding higher on above average volume. And holding the gains here. You see the stock's really carved out a range for itself for the second half of 2020 between $12 and $8. But really, this in the last month or so, $15 has been the high water mark, that resistance level that the stock is trying to level up past. And as you can see here, in just the last couple of trading days, boom, we get that breakout above $15. And in case you don't know, I love breakouts. They're pretty much the only type of stock that I trade. Again, because that breakout point, when a stock breaks out above resistance and that resistance becomes support, that offers you unparalleled safety to get into a stock, and the momentum is behind it to continue pushing it higher. I always like to use the Donkey Kong example. If you've ever played that game where you're trying to make your way onto the different levels all the way to the top and win the game here. So this is a beautiful Donkey Kong type breakout setup here. So you got a breakout here above 15. Beautiful support here at the 50-day moving average. And you take a look. You really take this low level here, the bottom end of the range at 8 to the breakout at 15. That gives you a price target of $22 above the $15 breakout. So that's plenty of upside. From where the stock is trading now here, just above $15. So that's reason number one. Let's zoom out here to the weekly chart, and there we go. All right, so as you can see, on a larger scale, the stock has recovered beautifully off of its low here in 2020, just exploding. You see here the blue line here is the 200-week moving average, and the red line is the 50-week moving average. And as you can see, not only does the stock in August here break out above both of those trend lines, but the stock just is on the verge here of what's called a golden cross. That is a very bullish stock indicator where the 50 period moving average, in this case we're talking about weekly stock chart, or weekly chart data, but the 50-week moving average, which is that red line here, is about to cross above the 200-week moving average, which is the slower. It's a slower moving average, but that tells you that momentum in this stock is booming. You've got the stock is crossed out above both those averages, and this signal here, this tells you that the shorter term trend is breaking above the longer term trend. And as you can see, you take a look at this blue line, it was declining for a significant chunk of 2017, 18, 19 into 20, but look here, it has flattened out. So we've got a flat 200 week moving average, an uptrending 50-week moving average, and a stock that has just soared above both of those. So a lot of momentum here for the stock. And as you can see here, you take a look back, that 15, you see this $15 level comes back into play again. This was just above the stock's high in 2017. So that significant breakout here on a weekly level. But there's one more level I want us to take a look at here in the stock. We're going to zoom out all the way to the monthly chart level, and let me move myself out of the way here. Take a look at this. You got a stock that was downtrending for basically 6 years, and let me pull up my my tool here to illustrate for you. So on a monthly basis, you have a stock that was downtrending. But take a look at this breakout. This is just beautiful. The red line here is the 50-month moving average, but just so you know, but not that it matters. You've got basically a pretty well-defined downtrend channel Starts off here around $26, and on the lower level about around $14. That's a roughly $12 range. Just in the last year, you see, on a larger scale, this uptrend is fierce. We break out above the top of that trend channel, and that breakout alone, if you take that $12 and you slap it on top of the breakout here around $10, that gives you a $22 price target. But again, that's in line with the first, say, the daily chart. That's another 22 breakouts. So you got two big breakouts on a daily chart, the weekly chart, and on the monthly chart. And again, once we see the momentum here push to 22, the next level from there is going to be a retest of the 2014 highs, which are just below $30. I believe there's enough momentum here. Again, that push of all these people, all these folks that are going to be taking flights, not just leisure flights, but on a business level, corporate travel. That's coming back. It's coming back in a big way. Myself, I traveled 3-4 times, for research at least a year. 2020 has been basically a year off, but and on top of the leisure trips and taking my family, I'll be heading back out and on the road looking for great investment opportunities, along with how many other analysts or folks just in a corporate setting getting from point A to point B. That's a lot of Wi-Fi. That's a lot of action here for the stock. So I think this, we're sitting just around $15. I believe this stock is going to push not only through that $22 price target, but all the way up to $30, which is a double. And again, the sky's the limit, so to speak. Sorry, bad dad joke. But yeah, the sky's the limit for Gogo and for stocks that are companies that are related to airline travel, the transport of people or from point A to point B. They're going to do very well. The reopening is happening, right? It may be slower in some people's minds than it really is, and in other people's minds, it's going faster. But I saw it with my own two eyes. South Florida was popping with people, and that momentum is here to stay. So if you're looking for good reopen stock, a good play to take advantage of the positive momentum here in the economy in the U.S., Gogo is my favorite bet right now. I believe a push to 30 is in the cards for this stock, which is more than double from where the stock is trading now. And bonus, stock reports earnings. Company reports earnings on March 11th. Over the last 2 months, analysts have been upping their estimates for the stock in a big way. The consensus was for originally back in December, analysts were looking for a loss of 60 cents or more. The consensus estimate now is 20 cents in a gain on a quarterly basis. The stock has beaten earnings estimates in 6 of the last 8 quarters, all by wide double-digit margins. And regardless of whether whether the company reports an earnings beat or not, the stock has posted a double-digit one-day gain of more than 10% in 4 of the last 6 quarters. So even if again, we talked a lot of chart business here. Even if you step away from the chart and you just look fundamentally at what the company is doing, sales are rising. This company's doing $400 million plus in annual revenue. Earnings are growing and beating estimates, and the stock is being rewarded for that sound business that Gogo is doing with double-digit pops at earnings. That is exactly the kind of stock that I want to own, and a stock that's going to lead the reopen rally. So take a closer look at Gogo here. It is my favorite reopen stock right now, and keep your eyes peeled. I got more of these winners coming your way. So thanks so much for watching my video today. For Rich Retirement TV, I'm J Rod, and I'll see you next week.